Welcome everybody to this briefing panel from the EEFIG group at the session of the Covenant of Mayors Investment Forum. We will just give a few minutes for people to be able to join us, recognizing these sessions are quite closely put together. So if you don't mind just putting yourselves on mute, and if there are people who wish to start communications or indeed communicate with the speakers, we will be having an active chat function during this workshop. That just means that please open the chat and please type questions into the chat at any time. If any of our speakers say something that you would like explanation or further explanation to or clarification, please write your comments into the chat. I will be monitoring that as the moderator of our session. We will be extending the session formally by an additional 10 to 15 minutes, which means that the formal part of our session will end at 11:45. But then there will be a Q&A for those of you who have specific questions either asked or that wish to be asked, and we will be taking those with the panel until 12 o'clock. So for those of you who are staying with the official timings of our session, by all means, feel free to leave at 11:45. But for those of you who have questions or who'd like to be able to engage directly with the panelists through the chat and then through a Q&A, we will be hosting that Q&A from 11:45 to 12 o'clock. So let's just we have 22 people currently with us. Let's just give a few more minutes for people to join, and then we will start our session. Okay, well, welcome. There's 24 of you now, and I think what we might do is start very slowly, just moving into the formal part of our discussion here. So welcome again, those of you for joining us. This is a session of the Covenant of Mayors Investment Forum that's hosted by the Energy Efficiency Financial Institutions Group. My role here is as moderator. I've been the rapporteur to the Energy Efficiency Financial Institutions Group, which is co-convened by the European Commission and the United Nations Environment Programme's Finance Initiative. It's been working since 2013 to resolve the issues around public and private sector investments into energy efficiency across buildings, industry, and SMEs. So those of you with questions on those subjects, please write them into the chat as we go along. Today's panel has been brought together to specifically focus on the aspects that relate to cities and that relate to the public financing of energy efficiency in the context of city infrastructures and local authorities. So with that said, with a warm welcome to Deputy Head of Unit Robert Nye from the European Commission, I would very much like Robert for you to take the floor and to give us some opening remarks. Robert.
Thank you very much, Peter, and welcome to all the participants. Thank you very much for your interest in this session on EEFIG and on financing in the city context. Indeed, Deputy Head of Unit in DG Energy, responsible for energy efficiency, policy and financing of energy efficiency. Just to give a little bit of context, we have the European Green Deal that sets the scene for this commission and for what we're doing in the area of decarbonization, which has really become the center of our agenda. And the Green Deal also prioritizes energy efficiency as one of the key means to enable the energy transition and to achieve decarbonization by 2050. As part of this agenda, we have the so-called energy efficiency first principle, which is aimed at ensuring that energy efficiency measures are always looked at in the context of, for example, investment decisions or policy decisions. In that context, energy efficiency financing is extremely important. We are faced with a financial gap. While the current legislation for example, on energy efficiency or on energy performance of buildings, includes references to energy efficiency financing, and it has done so for years, we see that there is a significant financing gap of several €100 billion per year in the period between now and 2030. And that gap can not only be filled by public financing, would be nice, but that's not possible. And private financing needs to be brought to the table. And that is really where EEFIG comes in. As Peter said, it's been working since 2013 to try and identify and overcome barriers to private investment in energy efficiency. Today, EEFIG has almost 500 members, with more than 150 of them actively participating in 8 different working groups addressing different subjects in this context. EEFIG, from our perspective, does very important work. It has been instrumental in shaping the Smart Finance for Smart Buildings initiative. It was part of the Clean Energy for All Europeans package preparations, and it's also directly referenced in the Renovation Wave communication. And one of the very concrete examples of what EEFIG has been driving is the de-risking energy efficiency platform, the D platform, which you can access online, where you find information, financial information about thousands of projects in this context. We've also, EEFIG has also been working on the taxonomy over the last years, and we will see very soon specific reports coming out on best practices of financial instruments, risk performance, and risk related to energy efficiency loan, multiple benefits, energy efficiency in industry. So a lot of work going on there, for which we are very grateful. Very briefly, we are today, I mentioned the EED and the Energy Performance of Buildings Directive. We are revising those pieces of legislation also to strengthen the financial elements there. On the Energy Performance of Buildings Directive, just to mention that the public consultation is still open until the 22nd of June. So please, if you have any input there, we will be very happy to receive that. And with that, I will give the floor back to Peter, who will guide you through the rest of the discussion today. Thank you very much.
Thank you, Robert. Your personal support of the EEFIG has been extremely important to all of us, as you were indeed in the room, as it were, in 2013 when this story began. And I'm pleased to say that this year in particular, the EEFIG working group structure, which has got 5 to 6 simultaneously working groups, which you will hear our colleagues from the panel mention, is a particularly useful way to bring together between 30 and 60 experts in the field of specific energy efficiency financing matters, such as the multiple benefits of energy efficiency, such as the correlation between energy performance of underlying assets and the default and arrears rates in mortgages, for example, or such as the industrial energy efficiency as a specific deep dive cluster. All of these working groups sort of specifically looking at different areas of this issue, because since we began the work of the EEFIG, the issue of energy efficiency has become very much a horizontal issue cutting across a number of sectors and a number of spaces. And so the EEFIG group itself, for those of you unfamiliar with it, has moved from being a single group which had 130 members at the time we wrote the first EEFIG report, which is still available in 2015, that was launched on the day of the Energy Union strategy from Maro Šefčovič's office. But since then, and since the production of the deep database now, which Robert, you had mentioned, and I put the link in the chat, has 17,000 projects in buildings and industry across all of Europe there in it, which is the largest pan-European benchmarking database of its type. And I'm happy to say has been picked up by OECD and others as being a best practice, and now is being looked at from across the world as a way to incentivize the benchmarking of energy efficiency projects. So since those days, we now have working groups, and one of the purposes of these types of events is to ensure that those of you in the audience who who'd like to join the EEFIG have visited its website, whose link is also in the chat box, and to please sign up and subscribe to the EEFIG's regular newsletter. It's quarterly newsletter of activities where you'll find all of our activities displayed and described, as well as a website that has reference to all of the prior reports and publications of the EEFIG, as well as an opportunity for you to join the EEFIG group yourself. So having said that, and moving quickly now to the panel session, it gives me enormous pleasure to invite four very strong friends of the EEFIG and members of our group, I think, in all cases since we began. So in fact, Murray Burt, Bettina Dorendorf, Isidoro Tapia, and Elizabeth Minjor, the panelists who will be joining me for this debate, have been extremely strong. They and their organizations have been extremely strong contributors to the work of the EEFIG as we've gone along. And what we have been preparing for you today is a discussion in this context that answers three specific questions. So rather than have sort of fire starter sort of initial presentations from the organizations, what I'm going to ask my panelists to do is introduce their organization and their own work in the context of that organization as they first speak. So as they first answer the questions, which you, the audience, and the organizers have felt are interested, please give us some background on your organization and your engagement with EEFIG so people understand the direction in which you come from. So without further ado, and leaving that panel introduction slide there, the first question that was in the program and that we have prepared to discuss is, how can financial instruments contribute to scaling up the energy renovation of housing across Europe, and how can local and regional authorities promote this? So that first question I'm going to ask to Isidoro. Isidoro, we can't hear you. There's no sound coming. Could the conference host ensure that people can hear Isidoro? I don't know if other people hear him? No, I see shaking heads. Conference host, can you make sure that Isidoro can be heard? I don't see a mute on his.
Yes, Isidora can be heard. She's not muted, so she should be okay.
Isidoro, there's a problem at your end with your microphone. What I'm going to do is I'm going to suggest you fix that while we hear the answer to that question from Bettina. Apologies for the change in order, but we actually can't hear you speaking. So keep going, and when I hear you, we'll then bring you in after Bettina. So Bettina, please.
Okay, good morning, everybody. It's a pleasure to be part of this panel. I'm working at KfW as Sustainability Manager, and actually I'm currently contributing to the EEFIG work in the working group on finance practices. I have been involved in the EEFIG in the very first beginning of setting up the EEFIG when I was working at the European Commission. So it's a pleasure to speak on behalf of KfW today. KfW is the state-owned German promotional bank with about 500 billion balance sheet volume and 6,000 employees worldwide in 70 locations. We are one of the largest global financiers to support environmental protection and fight against the negative impact of climate change. And we also address the megatrends, globalization, innovation, and social change in our activities. Our financing volume in normal years ranges between 75 and 85 billion euros. In 2020, due to the Corona aid programs we offered, it was almost double. KfW offers a broad range of promotional products, 2/3 of it domestic. 15 years ago, we started a very successful and best practice KfW promotional scheme to financially support energy efficiency in the building sector. In July 2021, this year, this will become the federal promotion for energy efficiency in buildings. Let me explain the main features. There are dedicated promotional products for residential buildings and non-residential buildings, regardless the customer group. The heart of the promotional scheme is the so-called efficiency house. The basic principle is easy. The higher the degree of efficiency reached, the higher the level of financial support. The starting point is always the primary energy demand and transmission heat loss required in the current building code, which is based on the EPBD. So the promotional element consists of a low interest rate loan, which these days is not really difficult. Much more important is a grant element. We call this partial debt relief. And for residential buildings, it ranges between 25% for an efficiently renovated monument and 45% for a highly efficiently renovated existing building, residential building. So in this case, the primary energy demand would have to be only 45% of the level required by the building code, resulting in a saving of 55% primary energy demand. From July, there is an extra grant of 5% for including an additional renewable energy package or sustainability package. So this is a good moment to mention that KfW does not run its own network of branch offices, and we do not take the customer credit risk. The business model is based mainly on the so-called on-lending, and we cooperate with financial partners all over the country. For non-residential buildings, the repayment relief, by the way, ranges between 15 and 25%. All this relates to a maximum loan amount of 120,000 euros. We also offer financial support for single measures, also with the choice of loan or grant. For single measures, the grant element can be 20% for wall insulation, smart home ventilation and cooling measures. And for new heating systems, it's higher, up to 40%. Customers can apply for a loan for up to 60,000 euros per housing unit for single measures. There is one important mandatory requirement for all promotional activities, which is the involvement of an energy expert. For this purpose, a dedicated pool of experts has been created in 2012. The experts have to prove their professional expertise and in addition attend to a high number of specialized training hours, 120 by the way, and they have to relist every 3 years. The involvement of the energy expert is crucial in the whole promotional process. He will support the customer in the planning and advise on the technical aspects of the application of public funds. At the same time, his signature is a prerequisite for dispersing the grant element of the promotional scheme by confirming that the measures implemented are in line with the technical promotional requirements. This is an element of quality control and fraud prevention, and it secures a high level of implementation quality of the efficiency measures in the building sector. So in summary, the promotional offer is highly standardized, transparent and easy to access, open for all technologies, investor groups and building types. And it requires the involvement of an energy expert. The higher the level of efficiency reached, the higher the level of promotion. And the choice between loans and grants gives a lot of flexibility. The generous grant element is a very big incentive for all customer groups. Many thanks. Happy to take your questions later.
Thank you very much, Bettina. That's brilliant. And congratulations to KfW for your continued success in that area. Isidoro, I'm wondering if we'll be able to hear you now respond to that question.
I hope you can. Can you?
Yes, we can. Very good.
Okay, thank you. Thank you, Peter. I was just introducing myself. My name is Isidoro Tapia. I work for the European Investment Bank in Luxembourg. I work on the energy efficiency team, which is something that we are dedicating a lot of effort and volumes in this past year. We are lending about 6 billion per year to energy efficiency activities, of which 1.5 billion is dedicated to building renovation. So we're accumulating a lot of experience in this field, and this is what we'd like to share with you today. You ask about financial instruments, what they can contribute to housing renovation. I would say, let me say first that the housing renovation is happening, but it is happening without third-party financing, without bank financing, or in most cases, without public financing. I think it is interesting, as part of the Spanish long-term renovation strategy, a survey was carried out, asking about the different sources of financing for housing renovation. Around 65% of investments in building renovations come from equity contributions from homeowners. Around 30% come from previous savings, either of the homeowners or the housing associations. And the rest, basically 5%, comes from subsidies. So the amount of third-party financing that is provided is very small. It's around 3%. So there is a huge room to increase the amount of public and bank financing or third-party financing to housing associations. And this is probably one of the main reasons, as Robert identified, this financing gap that is restraining and limiting the amount of home owners and of housing renovations which is taking place in Europe. Financial instruments, what can they do to contribute to housing renovation? I would say that there are three things. One is the price, the second is the tenor of the loan, and the third is the counterpart. So first, let me say the price. We believe that there is a strong correlation between, there is a significant correlation between the risk of the underlying asset and how green it is. Investing in increasing the energy efficiency of existing building stock will contribute, will de-risk these assets in the future. And somehow this is not reflected into the price of these loans yet. The second thing, as I said, is the tenor of the loan. Many of the energy efficiency investments have a very long payback period, 15 or 20 years even. So far, the financing that is available to most homeowners is only personal loans with a very limited tenor of 5 to 6 years. Only if we are able to provide long-term financing to homeowners, we will be able to achieve the duration that is needed to invest into these measures. And the third, as I say, counterparts. So we are seeing in many countries that the homeowners associations, condominiums, they must play a key role in housing renovations. However, so far, there is a limited availability of credit, of loans to these players. So by de-risking these players, by being able to reach out to them and to make them part of the housing renovation process is the third key aspect that financial instruments can contribute. And I will stop here for the moment. Thank you.
Thanks a lot, Isidora. Glad that you were able to speak. Next on our panel to answer the same question, but maybe from the perspective of local authorities, Elizabeth.
Yes, good morning, everybody. Thank you very much, first of all, for the kind invitation. So within BNP Paribas Fortis, I'm responsible for the implementation of legal, mandatory and sustainable topics in the credit department. So very, very linked to the direct customer. Within BNP Paribas, on group level, I'm the single point of contact for energy efficient mortgages. So I'm very active on that front. I'm also the president of the European Mortgage Federation, which is then on the European level, gathering all lenders around the energy efficient mortgages. So from the BNP Paribas, when we got the invite to join the EEFIG group, we were we felt privileged to share and exchange with this great group of people. We share best practices, research, and why this is important for us. We really want to enable a true transition. Energy transition is really important to us. Quoting our CEO, Jean-Laurent Bonafé, who says BNP Paribas as an international bank, we consider it our duty to contribute to a better future. Being in the center of the economy, sides taking actions ourselves, we bring diverse players together to direct the financial capital to projects that address the issue of climate change, more broadly, sustainable economic development. We had a memorandum of understanding signed between the United Nations Environmental Programme and our CEO. We will scale the collaborative effort by establishing sustainable finance facilities in many developing countries with a target funding amount of $10 billion by 2025. This through sourcing funding, arranging and issuing green loans. We have several sustainable linked loans in which we finance green projects. And we also took it a step further because we have three legal entities who also entered the energy efficient mortgage label. So of which two main domestic markets, of which Belgium and BNL in Italy. Now, looking at the financial instruments, as Robert says, we cannot only depend on public funding, and therefore, as we did in EEFIG, we evaluated different financial instruments. We saw some of them being more effective in case of owner-occupied, such as dedicated credit lines or the energy-efficient mortgages. Others looking at social housing, in which we looked at the energy services agreements, energy-efficient investment funds. And as you said, Peter, there are some great things that local authorities or cities can do. We have to speak about Belgium because this is my hometown, I would say. We have several examples. If we look at the Flemish region is really has started this year with a sort of interestless loan, so 0% energy loan, in which they allow, when people purchase a house, to take up an extra amount, and this can amount up to 60,000 euros, an extra amount of money in order to renovate the housing. And they have to prove that the EPC rating is really has improved within the 5 years. And the Flemish government will actually refund the interests on that advance, on that part of the loan. So we made it very easy with the banking sector and with the Flemish government. The customer comes to the bank, applies for the loan, the banks give that information to the Flemish government, and the Flemish government will contact the customer to confirm. And then every year we just inform the Flemish government on the interests paid to the customers, by the customers, of course, and they then refund the customer on a yearly basis. So this is a real important instrument because this is very concrete, and people are really stimulated and see the importance that the authority is bringing. We also have this more on the social end, on consumers loans, and they actually follow the same principle, but then more for the social segment, which is usually not financed by the private banks. In, for example, the city of Ghent, there is a very concrete climate plan they have. They want to reduce the CO2 emissions by 40% in 2030. And so they have a real, I would say, aggressive and clear plan on doing this. And they look at, in first instance, energy efficient living and renewable energy. So they really, they estimated per average house, you would need 35,000 euros to conduct this this energy efficient living. And they look at isolation, roof, wall, floor, double glazing, renewable energy such as solar panels, a heat pump. They do this on different levels, so they really double their effort on renovation advice, on accompanying people, and they provide loans via a rolling fund. So this is really a way to also reach the target groups and avoid exclusion for people from a certain income category. So I think there's many things to say, and I know time is limited. So I would say don't hesitate to ask more questions in case you're more interested. But yeah, I will take questions later. Thank you very much.
Thanks a lot, Elizabeth. Yeah, you're doing so much and there's so little time on the session to really describe it. But what I've heard now is a lot of public-private blending mechanisms that each one of you has described. So with that in mind, let's go to question 2, which is really about the co-benefits. We've been struggling, I think, with energy renovations to show how they deliver improved comfort, local jobs, productivity increase in buildings, and how that can contribute to the business plan to attract private finance and indeed public support. So perhaps Murray, you can take us off here with respect of what that means for financial institutions.
Thank you very much, and thank you for the invitation to participate in this panel. DWS Group is committed to achieving net zero emissions well before 2050 across the 820 billion euros that we manage on behalf of pension funds, insurance companies, and retail investors in Europe and around the world. The job creation and economic growth potential of building retrofits is a very important macro benefit and a key reason for investor focus in this area. It's also a benefit of the European Energy Efficiency Fund, which we manage on behalf of the EIB and the Commission, and which lends to municipalities to undertake renovations. The specific co-benefits of building renovation is relevant across many of the asset classes that we focus on. For instance, we're a major real estate owner and lender. A recent report supported by UNEP FI examined the evidence did a survey of investors, and it was found that 87% and I'll just post a link to the chat to the report, found that there was 87% of investors surveyed were seeing increased demand for healthy buildings, and that 90% are planning to enhance their health and well-being strategies. Due to COVID and health concerns and wanting to attract and retain tenants in offices and retail buildings and apartment buildings, investors are increasingly focusing on healthy buildings. In fact, there's even potentially a 4 to 7% rent premium for healthy buildings, which is an important incentive. There's a label for well-managed buildings, for healthy buildings, called the WELL. And there's the GRESB, which is the annual survey of real estate investors, has already integrated for several years questions about real estate investors' health and well-being policies. And I'll just post a link to that as well. But more broadly than real estate, making buildings healthier is a key priority across our homes, especially as we're spending more time in this area. The EEFIG Multiple Benefits Working Group is focusing on this issue. 1 in 6 Europeans live in unhealthy homes, and the World Health Organization estimates that poor indoor air quality is responsible for nearly 100,000 deaths a year in Europe. And the annual total cost to the EU of leaving people in inadequate homes is nearly 200 billion euros. The key problem is that the financial benefits of healthier homes occur due to lower numbers of hospital visits, and this benefit can't be accessed by an individual's decision to retrofit their home. An additional difficulty is that renovating the worst quality homes is likely more expensive. However, a best practice example is Ireland's Warmth and Wellbeing program, which provides free support for renovating poor quality homes for people with respiratory conditions. The program is also undertaking medical analysis of health benefits of the retrofits. There's great potential to replicate this approach within the EU's recovery program and renovation wave, with the goal of developing outcomes contracts, which were previously known as social impact bonds, between ministries of health and programs providing grants and advice for renovation, basically a new source of capital for public authorities to develop incentives and loans and to really strengthen the business case for all kinds of financial institutions, but primarily for individuals to help them renovate their homes. Thanks.
Thanks, Murray, and thanks for keeping to time. It's fascinating when you start to connect those public benefits and you derive the key blending criteria for public funds with private funds. So with that in mind, and as one of the biggest sort of blenders in Europe, Bettina, perhaps you could comment on that from the public's perspective.
Yes, sure. So KfW does not look at the health benefits of energy efficiency. We do a yearly evaluation of the promotional effects of our activities as regards energy efficiency financing for the building sector. And I can clearly say that providing public funds for energy efficiency pay back in many ways. So as a result of the yearly evaluation, we can say that there's a clear connection between public funds spent for energy efficiency measures in the building sector and economic and environmental effects. So let me give you some highlights. The promotional funding volume for energy efficiency in buildings between 2006 and 2020 amounted to almost 160 billion euros. And we can clearly see that the energy efficiency construction and refurbishment activities had a regional and local economic stimulus effect, because we tracked the investment volume, which was triggered by the promotional activities, and they amount to 500 billion euros. In 2020 alone, it was already 78 billion euros. So energy efficiency investments supported with public funds trigger investments, and this is an important economic stimulus. Labor effects are an additional side benefit, because energy efficiency measures in the building sector are a local job motor, and this is definitively of interest to the public sector. Since 2006, our evaluation says that approximately 6 million jobs have been created or secured for at least 1 year. So the public budget benefits from social security payments as a result. So last but not least, and a very important effect of the energy efficiency measures financed with public funds is the considerable CO2 emission reduction, which can be achieved, but we wanted to focus on the side benefits apart from CO2 emission. However, I think it's impressive and worth to mention, because it amounts to 12.3 million tons of CO2 per year, which is avoided as a result of the energy efficiency measures financed with public funds. So now let me also mention let me also mention the private fund side. There is a powerful argument to attract private funds into energy efficiency renovation, which is the expected increase in property value. And KfW is currently developing a tool for private landlords renting out a small number of properties. And this tool will show the effect of an efficiency refurbishment on the property value. The feedback received shows a high degree of interest. So there are also tools in the market showing the cost of no action in light of the increasing regulatory pressure in relation to climate change. The German Corporate Initiative for Energy Efficiency developed, for instance, a tool for professional property managers, creating transparency regarding the risk of loss in asset value as a result of no investing into energy efficiency. So creating transparency on or the increase in asset value or the risk of stranded asset is a real eye-opener for private and professional investors. And I think I conclude by saying that we need more of these tools and more eye-openers to motivate all investor groups. Thank you.
Thanks, Bettina. We certainly need to open our eyes to those multiple benefits. And I know EIB has. So Isidora, perhaps in under 4 minutes, you can summarize how the EIB looks at the multiple benefits.
Sure. I mean, multiple benefits, it's a very relevant topic in the context of energy efficiency investments, but I would say it's even more important in the context of housing in investments. So there are different dimensions that we look at this. I mean, there is an individual dimension, of course. Basically, just comparing the energy savings that are achieved with an energy efficiency renovation with the investment cost is simply not correct, no? As Bettina described. Of course, there are different elements that can be incorporated into the analysis, and others are more difficult to quantify. But even so, any tool, any way to try to quantify these effects are much welcome. Bettina described the increase in the property value of the housing renovation, which is a very important element. individual decisions. But it's not only relevant for the individuals themselves, but also for the institutions that are providing the loans or that are financing these investments. On top of that, and especially for public institutions such as KfW or the EIB, there are other elements and other effects of housing renovations that are important to be taken into account and to be incorporated into the analysis. I'm going to give you one specific example. We did an operation with the Metropolitan Authority of Barcelona in Spain for the renovation, a 50 million loan for the renovation of existing buildings in some municipalities across Barcelona. And one of the elements that one of the conclusions after the implementation of the work was, of course, the energy savings that were achieved between 30 and 40% as compared to the previous situation before the renovation. A second important element was the increase in the property value for the individual owners. But a third element, which was relevant in this case, was a reduction in the crime rate in the neighborhoods where the renovations took place. And this is something which is also quantifiable, which is, of course, is relevant for the municipality in this case, and which has a very important value for the society. So it is important that we incorporate this into the analysis and we value energy efficiency investments at their full value to the society.
Thanks, Isidora. We'll have that snippet put out for mayors later in terms of crime reduction through energy efficiency. I think it's an important point that you make. So just saving the best to last and asking the key question, which is, are green loans less risky? And how can that lower risk comparison improve the way in which cities organize their energy renovation programs? Perhaps, Elizabeth, you can kick us off here.
Yes, thank you very much, Peter. I see time is really going fast, so I will try to be very brief, and you give me a sign if I'm telling too much, because there's much to tell. There has been some studies being conducted, and also with EEFIG. We did have some supervised bilaterals with BaFin, with the European Central Bank, in order to collect information upfront, input from their side. And then we had a statistical and method review on relevant literature studies. There's the famous study of the Bank of England, and that's one of the first studies I came across in this area. Where it really shows that indeed the energy efficiency has an impact on the probability of default. There's other studies. There's a Dutch case which looked at also the building's energy efficiency and probability of mortgage default. And what they also remarked, and which is really very interesting, especially if we look at more social groups, is that, for example, savings coming from the reduced costs, such as energy bills and home insurance, they have a greater impact on borrowers with less disposable income. So we see that this group is really benefiting more from an energy efficient house, which is a very interesting finding. And then, of course, last but not least, I would like to say a word about EDAP, because EDAP was a Horizon 2020 project conducted by the European Mortgage Federation. I'm presiding, and they also have a final report on the correlation analysis between energy efficiency and risks. So they took many data points in several countries. So they worked in Italy, Belgium, and Portugal. And you see here indeed that there are some promising results, because you see correlation between the energy efficiency and the probability of default. And not only that, we saw that energy efficient investment leads also to an increased valuation of the real estate. So this is another additional benefit not only for the bank, of course, it is a benefit for the bank, but also for the house owner himself. And this can even motivate somebody more to do this sort of renovations. We also observed a decreased solvency risk for owners, and of course a reduced lending risk for banks. And we continue with the European Mortgage Federation to collect this type of data, because with around 26 banks now, I believe, we have joined the energy efficient mortgage label, in which we have this harmonized disclosure template. And the harmonized disclosure template was also one of the EDAP works. Is actually a reporting template that is being used by other labeled banks to show the mortgage portfolio and to show the results and what is happening with these green loans. And this really allows us to have a unique language amongst all different participating banks, and really monitor the evolution of the energy efficiency and its effect on defaults, etc. So I think I would like to conclude there, because I see time is running. So thank you very much for your attention.
No, thank you, Elizabeth. And the work of the Energy Mortgage Federation and the parallel Horizon 2020 projects that have been funding this has been absolutely excellent. And all of the banks have been really forward thinking in terms of the design of that product. But Murray, perhaps you can take us into the Q&A by describing really why this is all relevant to this question, particularly in energy renovation programs.
Definitely. So as mentioned, the EEFIG working group has really been assembling the evidence and working with mortgage lenders for this type of new analysis. And we've heard about BNP and a group of the Italian banks, but other banks, including OP Financial and mortgage providers like Allianz, Nationwide, Deutsche Bank have been, and ING have been focusing in this area. And I'll post a link to the EDAP report that was mentioned on the Italian banks establishing their priorities. So these banks are really to be congratulated, as they're leading the way for green asset value and financial risk, and that's of great importance for member states who are looking to scale up retrofits, to know that there are partner banks and new banks of even more should be more interested in working in this area. And this is also of great interest and is welcomed by investors. 2 months ago, through the Institutional Investors Group for Climate Change, 35 investors, including DWS, with a collective 11 trillion in assets, published a set of investor expectations of banks. These investors, as shareholders in banks, are using their influence to encourage banks to strengthen their net zero plans. And there's no better way for banks to act than by strengthening their green mortgage policies and products. As well, many investors like DWS invest in mortgage-backed bonds and would like to see more banks issuing green mortgage bonds. And with record low interest rates, our clients will need to invest more in bonds like this. Indeed, 45 major banks around the world with 29 trillion in assets have joined the Net Zero Banking Alliance of UNEP FI. So I think those banks will also be looking to strengthen their work in this area. So in the autumn, the EEFIG working group will publish its report and on financial risk and green mortgages. And I hope that as more banks recognize the lower risk of their mortgage portfolios of renovating buildings, more banks will develop competitive green mortgage offerings, deepen their work with member states, agencies, and development banks. And importantly, there's also the supply chain of companies in the renovation sector. And I also hope that the findings will encourage central banks and policymakers to incorporate these findings into financial regulations to further strengthen the incentive for banks to undertake more retrofits. This is important new work for the buildings policy area, but it doesn't let governments off the hook for putting in place stronger policies, incentives, penalties, and frameworks for renovation. Thanks.
Thanks a lot, Murray. And of course, one of the risks of having a world-class panel and being a group that answers questions so directly, all the questions would appear to be exhausted in terms of the audience today with respect of their frequency of asking in the chat. I encourage audience members to write any questions in the chat. I also note that the panel we have is truly one of the most knowledgeable panels on the subject, and we need to rally 275 million euros a year just to deliver the renovation wave, which would be 35 million homes. We're a long way off that, which is what Robert said in his opening remarks. So Surely those of you listening today would have a question as to how these organizations you've just heard present will be contributing to that. I certainly, in absence of a question, I'm going to ask my panel to think about the recovery funds, because I know that while private sector financial institutions and public sector organizations are in some way sort of implicated in that, with the plans themselves just currently being approved and the record amount of money and shortness of time, I wonder what you think about the deployment of the recovery and resilience facilities in the context of renovating cities. Does anybody from the panel have an idea or a point that they'd like to bring forwards on that question, which I imagine must be one of the burning ones from the people listening? Does anybody from the panel, would anybody like to take that? Perhaps Isidoro at the EIB, you have already started work on what the EIB's role might be in that context.
Sure. The recovery funds, I mean, the plans have been presented by the member states. They are now being evaluated by the Commission. We expect that some of them will be approved shortly. We have seen cases in which the member states have pre-allocated a significant amount of funds to building renovation, which is very encouraging, and probably building renovation is one of the sectors that is going to receive an important part of these funds. In our view, it is also important not only to use those funds, but to be able to combine those funds with third-party financing in order to avoid that this effort is only a one-off, and in order to convert this effort into a sustainable increase in the amount of energy efficiency investments. As I described for the case of Spain, for the long-term renovation strategy in Spain, the amount, but this is the case of many other member states, the amount of third-party financing in building renovation is very limited. And this is one of the key factors to increase the rate of building renovation and to be able to meet this ultimate goal of decarbonizing the building stock by 2050. So I would say that it is very important not only to use those funds as subsidies, but also to combine those funds into financial instruments, or to combine those funds with bank financing or public financing in order to make a sustainable effort.
I'll just add to that. I think it's key for the recovery packages to provide capital to programs that really provide incentives for individuals and to really overcome that initial cost barrier that they see on renovating their homes, and that there needs to be this developed over time and supply chains scaled up so that there is a quality workforce that are able to do more renovations over time, because we need to renovate just about every single building in Europe, and this is a huge business opportunity. But the incentives, and we look at how renewables have grown and are now an established and competitive part of the energy landscape. That's the path for building renovations, but we just haven't seen the support and the connections between all the different policies and incentives, and even just bringing in the energy markets to renovations. So yeah, the recovery packages of great potential to really scale up effort here, and I hope that they are coming and really trying to work with banks and investors more increasingly.
Thanks, Mari, and thanks, Isidoro. There is a question now from Mauricio Irivarren, and I think it's addressed to you, Elizabeth, and that is, could you talk a little bit about how maybe recovery funds could be used to enable guarantee facilities that may be designed perhaps to give greater access? People are worried that maybe the energy poor, those people sort of at the lower end of the income spectrum, may not have access to financing if they want to do a renovation. Is that a way that the recovery funds could be used?
Definitely, and that's also something we observed, and looking at the Dutch case I mentioned. We see that those groups are the groups that are benefiting the most of these energy efficient renovations. Definitely. So these recovery funds could be used in different ways. If we look at the private sector, we could use it as guarantee facilities for these type of loans. So to relieve the banks a bit of the capital requirements. On another hand, it can also be used more by cities or other local authorities to invest either directly in the renovation of social housing or to really even fund even more initiatives, as I mentioned, the city of Ghent that has this rolling fund, but their difficulty is to have more budget being added to this rolling fund in order to accelerate even more these energy efficient investments and of course also the guidance the people need, because for many consumers it is still very difficult. There's still a high barrier to do this, not only for financial reasons, but also how do I know that my investment is gonna bring the result I need? Is this result gonna be sufficient? Who is the right person to conduct this type of renovation work? And so this type of guidance is also certainly needed, especially when you're looking at the residential market.
Yes, I would like actually to add on this and stress that it's very important to focus on the specific needs of the different customer and investor groups for investing into energy efficiency in the building sector. The EEFIG did this in a very analytical and innovative way in its first report in 2015. And I think it's always important to keep in mind that we have to put ourselves into the shoes of the investors and make sure we address their needs. For instance, you, Elizabeth, you just mentioned the need to be guided, to have a clear guidance on how to walk through an investment process. The other day I learned that in Spain there are one-stop shop approaches which have a regional focus. And they, on a regional basis, they organize themselves with the contractors. There is an organizational body to support the customers and create the link between the contracting and construction companies and the end customers and the financial parties to make sure that a successful investment is implemented to the benefit of all parties involved. So not forget about the different perspectives of the investor groups.
Brilliant. Thank you so much, Bettina and Elizabeth, for your answers to that. I recognize there are multiple parallel sessions working and that the formal lunch break has begun. But as we close this session, what I'm going to suggest we do is that each one of you in 30 seconds or less could think of a closing remark that you would give to the Covenant of Mayors Investment Forum that connects perhaps the work of the EEFIG and your own organization's contributions, just to characterize what cities and mayors need to be thinking about, perhaps with respect to energy efficiency in the next year or so, in the context of recovery, in the context of where we stand, in the context of increasing the financing flows. So perhaps in the order of the card, putting Murray first, each one of you can just give me that last closing remark, Murray.
Great. Well, if any people from cities have specific public sector projects that they're interested in, please contact the European Energy Efficiency Fund that we manage. But if you're thinking about broader retrofit programs across homes and buildings and commercial buildings, then the EEFIG steering committee here are a great resource for you to provide advice and brainstorm with mayors and city staff on strengthening policies and programs.
Thank you, Murray. Bettina? You're on mute, Bettina. 30 seconds to close.
yes, for local policymakers, my advice would be to make sure you get aware of all best practice examples over Europe and take inspiration from them as regards well-functioning energy efficiency networks, well-functioning local one-stop shop solutions, and also well-functioning integration of national and European promotional funds to make financing easier. Thank you.
Thank you, Bettina. Isidora?
Thank you, Peter. Building renovation has a very important role in the EU decarbonization scenarios. It has a very important role for individuals, but I would say that also for cities. So there are tremendous opportunities there in terms of health, safety, reduction in pollution. So it is very important to have the cities on board and to help to contribute to the increase in the renovation of the existing building stock.
Brilliant. Thanks, and thanks to the EIB for supporting that. And finally, Elizabeth.
Yes, thank you very much, Peter. My advice would be that there's different axes to work on. And first of all, there's a real need for awareness towards the citizens of what would be the effect of this energy efficient renovation and why it is needed. And the EEFIG has worked on many financing practices, examples, case studies, which is it is a real very rich work, I would say, and in fall normally the report should be out, and so there we really see that it is really important, and you play a key role in accelerating this green transition. So yeah, I think I would like to close with that.
Thanks, Elizabeth, and thank you very much to all the panel. Thank you to the 27 of you as participants who've stayed till the end. I noticed that we got up to the mid-30s in the session. Given that there are 5 sessions going on in parallel, I think that's a good turnout. The video recording of this panel will be made available by the organizers, and I very much hope that I would like to thank Robert Nye and the support of the Commission, the United Nations Environment Programme, and all of my panelists for the great work that the EEFIG is continuing to do, and encourage all of you to follow us at our website and to continue to support the innovative and important processes that we contribute towards. Okay, thank you very much, and thanks for joining us today. Bye-bye.